All right, welcome. Let's talk about your money. Today, we're going to demystify two of the most important and sometimes, let's be honest, intimidating parts of your financial life: budgeting and credit. My goal here is pretty simple: to help you move from feeling uncertain about your finances to a place of real clarity and control. So let's get into it and start building your financial blueprint step by step. Does this sound familiar at all? This is a direct quote from a couple, Peter and Suzanne. But wow, does it capture a feeling so many of us have? You know you should be saving more, but you also don't want to completely gut your lifestyle to do it. It's this classic financial dilemma, right? How do you plan for the future without totally sacrificing your happiness right now? Well, the very first step in solving that puzzle is a simple tool called a cash flow statement. Look, this is the absolute foundation of any good budget. All it does is answer three really basic questions: how much money comes in, where does it come from, and where does it all go? The formula couldn't be easier. Take your income, subtract your expenses, and you're left with either a surplus or a shortfall. This number right here, it's the starting line for taking back control. So that's where we begin, figuring out exactly where your money is going. And just to be clear, this isn't about judging yourself for past purchases or feeling guilty. Nope. This is all about awareness, because you can't control what you can't see. And to do that, we just need to split our spending into two main buckets. Those two buckets are your basic expenses and your discretionary expenses. Think of it this way. Basic is all the stuff you have to pay for: your mortgage or rent, your groceries, your car payment. But discretionary? Well, that's the fun stuff, the wants: your morning coffee, dinners out, streaming subscriptions, weekend trips. And here is the absolute key insight. That discretionary column is where all your power is. It's the area where making even small changes can lead to really big savings down the line. Okay, so once you know where your money is actually going, you can start to build your blueprint. This is the moment you stop being a passenger in your own financial life and get into the driver's seat. A budget isn't a cage. It's not about restriction. It's a strategic plan. It's your personal blueprint for building the exact financial future you want. And building that blueprint really just comes down to three pretty simple steps. First, you use your cash flow to set a realistic savings goal. Second, you look at your discretionary spending and find places to trim so you can hit that goal. And third, and this one is so crucial, you review it every single month. A budget isn't some set it and forget it thing. It's a living, breathing document that has to change and adapt as your life changes. All right, let's totally switch gears. We've talked about how to manage the money you have. Now let's dive into the world of money you might need to borrow. Understanding how lenders see you is an absolute game changer, and it all boils down to a few key rules of credit. It really all comes down to this one question: are you a good risk? A lender's entire process, all their forms and questions, it's all designed to predict one thing and one thing only: if we lend this person money, are we going to get it back? If you understand how they answer that question, you hold the keys to unlocking way better financial opportunities. And they answer that question using a framework they call the 5 C's of credit. You can think of this as their universal checklist. Character is your reputation. Do you have a history of paying your bills on time? Capacity is about your income. Can you actually afford to pay this back? Credit is your track record with past debts. Collateral is any asset you might pledge to secure the loan, like a car or a house. And finally, capital is your net worth, what you own minus what you owe. Every lender is looking at these 5 things. Now, that third C, your credit history, is so important that it actually gets boiled down and summarized into one single, incredibly powerful 3-digit number. You can think of it like your financial GPA. And this little number follows you everywhere, and it can either open doors for you or slam them shut. And that number, of course, is your credit score. Here in Canada, it'll typically be somewhere between 300 and 900. A higher score tells lenders you're a lower risk, which means you're not only more likely to get approved for a loan, but you'll get much better interest rates. An average score is about 650, but really, the higher you can get that number, the more power and options you're going to have. So once you understand the rules of the game and you've got a solid score, you can start choosing your credit tools. But you have to think of it like a workshop. Having a bunch of powerful tools is great, but success really depends on using the right tool for the right job. Let's quickly break down the 3 most common tools in the shed.
Credit cards, they're fantastic for everyday convenience, but you have to be careful. They come with really high interest rates if you carry a balance. A personal line of credit is way more flexible and usually has lower rates, which makes it perfect for emergencies or home projects. And finally, you've got a personal loan. This is for a big one-time purchase, like a car. You get a lump sum of cash and a clear fixed repayment schedule.
So let's just pull it all together. What we've really done here is build a powerful financial toolkit. Your budget, that's your roadmap, your guide for spending and saving. The 5 C's, that's your framework for making sure you look like a trustworthy, reliable borrower. And knowing the right credit tools to use gives you the options you need to achieve your goals, whether that's buying a house or just having a solid safety net in place.
So it all comes back to this. You have the blueprint now. You have the plans for taking control of your financial life. The question isn't how anymore. The only question left is, what will you build? Thanks for joining me.